Good morning, everybody, and welcome to another edition of ChartWatch Live. My name is Capolingua. I'm from Market Index and Live Markets, and it is a pleasure to be chatting markets with you today. Plenty to get through today. Going to be a packed schedule. I want to talk about silver, the move that's happening in the commodity. I want to talk about Aussie silver stocks as well. So if you've got a few of those that you would like me to look at, certainly start making notes of that right now. But before we do, we're going to check out our portfolio management model, and then of course we'll get to your offline and online requests. People that have been following my work for some time know that, figuratively speaking, I have a bucket that I can fill with risk. Ultimately, as investors, as traders, we are risk managers first and foremost, and the portfolio bucket analogy basically uses a benchmark. In this case, we've got the Nasdaq composite. So if I was investing in the USA, this would determine how much I fill my bucket with risk effectively. And when the market is going gangbusters, for example, when we've got double greens in my trend ribbons, you can see the short-term trend ribbon, the long-term trend ribbon, when we see the price action showing rising peaks and rising troughs. Now, the only way to get a higher peak than the last peak, don't forget, each peak represents a point of supply, and a point in price where there were many traders selling and overwhelming the demand that was in the system. So if we are making higher peaks, it's telling you that the supply that was in the system last time probably isn't there, or that there's enough demand to clear it out of the market. So that's usually a pretty good sign, and we're making those lower troughs as well, higher points of demand. If points of demand are getting higher, then demand is potentially increasing also. So we're looking to the market to tell us, to give us signs that the demand side ultimately is in control, or that we've got excess demand. So that's when we're going to fill our portfolio bucket to the brim. We can have as much risk as we'd like. As the market starts to do things that tell us the supply side is coming into control, we're getting lower peaks and lower troughs. So lower peaks is supply reinforcement, lower troughs is demand removal, big black candles, aggressive selling. We're going to just take some of the risk out of the bucket, or lower our limit, so to speak. And we've been doing that on the Nasdaq because we had some pretty strong signs. Ordinarily strong signs. More often than not is the phrase I like to use, MOTN. And when we see these signs, more often than not, the price tends to go down, and therefore we take precautionary measures here to reduce the risk in our portfolio bucket. Our portfolio bucket got as low as 1/3 on that big black candle there, but is now back to what I call a balance level, about 50-50. I would be happy to move it up to a 2/3 level if we can close above 23,570 with a really emphatic white candle. I'd like to see some volume coming in. I might not get it at this time of the year because it tends to be a really quiet time of the year. If I see the volume in this area, because I know there was supply there in the past and it got pretty aggressive, I just want to see an interaction with the supply if it's still there. Now, it might not be there, and we might not see the volume. We'll just see white candles and we'll go through, and that'll tell us that there just is no supply. All the supply that created this downward move, it's literally gone. It's been consumed by the demand side, and all that's left is that demand. Either way, excess demand is excess demand. But ideally, we do see some signs that the supply that might be in the system is dealt with, and that'll be higher volume with those candles. So, interesting setup on the Nasdaq. Bottom line is we're 50-50, or I'm 50-50 anyway, quite a balanced position, I think. The ASX 200, we can see straight away, it has had a far more severe showing of supply side control. Look at the candles, they're much bigger, far more pronounced, certainly in their frequency and also their size. And we have much larger downward moves before you have these very shallow rallies. Think of what that says about market sentiment when you're getting big down moves and really very feeble rallies. The last rally, however, is starting to look interesting, and today's candle, if it holds, I know it's a live candle, we should discount it, but if it holds, is starting to create a higher trough. So potentially some demand reinforcement. And as I said in yesterday's update in my Market Index evening wrap, where I do the technical analysis of this for you daily, it wouldn't take much to turn this positive again and then bring my risk level up in my risk bucket for my Australian share portfolio to a more balanced level. But I still think there's enough concerns out there with what we're seeing to stay at the minimum risk setting at the moment, which is 1/3. Now, I like to do this at the start because I think it helps frame our coming discussion on the stocks that you're interested in talking about. And as I said, hang around, we'll definitely at some stage get to that silver review. Now, I just wanted to do a couple of offline requests. I respect the fact that not everybody can get here, and there's only a couple, so we'll just quickly knock them off. And the first one is from Hari, and Hari's asking about XYZ. XZ or XYZ if you prefer. And this is Block. So this was the old Afterpay. It was obviously acquired by the US company Block, and it's changed its ticker. So let's start from the start. I'll do a little bit more of an explanation on this one, and that'll, I guess, help provide a foundation for some of our analysis as we go. So I know some people have been here for 4, 5, 6 weeks with me, and they go, "Oh, Carl, I already know this stuff. Let's do something new." And I get it, but we've always got new people coming on board that perhaps don't know the system as well. So look at this as revision if you're a bit of an old hand. Certainly, let's start with my checklist. And if you read, again, my work on Market Index, you know I pretty much exclusively deal in checklists based upon my methodology. So we're looking for trends at the start, the short-term trend, the long-term trend. And if you have my trend ribbons, and you can certainly get them, I'll tell you how to get them on TradingView. It's the only place I'm sharing them at the moment. That might change, but for the moment you can get them in TradingView, and because it's obviously a platform that is widely used, it's got great functionality, and you can actually get a free account where I can share it with you. I'll share with you how to do that a little bit later on in the recording if you're watching the recording. Now, we start with the trend for the short-term trend ribbon. Obvious place to start. It's telling us what the traders in the market are thinking, and the long-term trend ribbon tells us what the longer-term positional investors tend to be doing or thinking. And short-term downtrend here is quite apparent. What I love about the ribbons, and it's one thing to have the durations, of course, but it's more about the colour change, and that's not just in the durations, and certainly it's not just up or down, because there's an important phase in between of equilibrium where the market is undecided, and we can see here that the market does move through phases of demand side control, equilibrium, into supply side control, and we are supply side controlled on the short term trend ribbon, and indeed I feel now we are also moving into supply side control on the long term trend ribbon as well. So that both the traders and the longer term positional investors, the big fund managers, I would put to you, are more likely rotating out of this stock than they are rotating into it. Certainly they're not trying to get into it in any aggressive sort of fashion. The trend ribbons are wonderful, just a quick determination of short-term up, short-term down, short-term neutral, long-term up, long-term down, long-term neutral. Then we go to our price action. The problem with the trend ribbons is they can be a little bit delayed. Okay, inevitably they are dumbing down what is happening in the price action. And if you're a technical analyst that only uses indicators and ribbons like this and ignores the price action, I feel you are leaving out most of the picture, because the price action is really at the coalface of what is happening in demand and supply. And by that I mean we're looking at our peaks and troughs, and we can go one step even further to really nail down the most shortest of short-term indications of what the demand suppliers are doing in our candles, which we'll do next. So we've talked, in fact, I kind of talked about this at the start, didn't I, in the Nasdaq, when I said, look, healthy price action, healthy demand side control. Price action shows rising peaks and rising troughs. Okay, so if we call these points of supply, I mean, peak, trough, I don't mind those terms, but ultimately, really, what is a peak? A peak is a place in price where we saw excess supply come in the system. So it's a point of supply, and the opposite, of course, would be the point of demand. So a point where the price pulled back and we had excess demand in the system. Okay, so this is what we say would be strong demand side control price action. I won't go into the supply side control, just turn everything on its head. The other part of it, so I mean, certainly higher peaks and higher troughs, that's one thing. But we also want to check that these phases here are longer than these phases here. All right, we should see that in a strong demand side control market, those motive phases, as I call them, where we're moving motive in the direction of the trend, are much bigger than those pullback phases. And one way we can put this into a rule is to say, now it might take you a couple of goes to get this, but the last point of demand should be at or above the second from last point of supply. So that again, the last point of demand should be at or above the second from last point of supply. So in this scenario here, and let's assume that this is today. This is today. Well, what's the last point of demand? So this is the last point of demand. We'll call that point of demand 1. We'll call this the last point of supply, and that makes this the second from last point of supply. And if you have this rule that the last point of demand needs to be at or above the second last point of supply, then there's a well, it has to be the case that this phase here is going to be longer than that phase there. So it's a little rule, I think, helps us just solidify what is good price action. Now, let's go over here and determine whether we have good price action. And I think what's one of the great things about this model is once you know it well, you actually don't have to spend a lot of time analysing stock. I think for people who do know it well, been following me for the last couple of months, you've already flicked. You've already gone. You haven't spent all this time talking about XYZ. You've gone trend ribbons, nup, price action, nup, candles, nup, and you've moved on, okay? But that's effectively what we're seeing here, in that the price action is telling us the market really can't decide. It is schizophrenic. It is all over the place. What have we got? We've got actually rising points of supply, rising peaks. We've got falling troughs. In fact, wherever the next trough is going to form, we don't know where it's going to form because it hasn't. We're still heading down in this. Imagine you're walking in the Alps. There's a heavy fog in the French Alps, and you're walking down the hill. I guess you're walking towards a valley at some stage, but you won't know where that valley is until you take one step up the other side, or you look behind. That's the valley. So we won't know where this next trough is going to be until it forms, but we will know wherever it forms, it must be beneath the last one. Okay. In fact, it's beneath the last two at this stage. Schizophrenic price action. Bottom line here is, ladies and gentlemen, if the market can't figure out whether this is a good stock to own or not, why are we looking at it? If there isn't a strong consensus, and this is not strong consensus, and I'm just going to go to a stock which I know has strong consensus at this point in time, and it's this one here. Like, the demand side knows they've got cash, they just want to turn their cash into shares and own shares. And the supply side, well, they've got shares and they don't want cash. They'd rather have shares. So as trend followers, really, we're looking for the strongest signs of consensus. And this is the opposite of that. The trend ribbons are telling us it's actually slipped from equilibrium, which is, I guess, a lack of consensus, to a growing consensus that potentially their price is going to be lower. And that's why people are getting out. The price is going to be lower, earnings aren't going to be as good if we translate it back to the fundamentals. And that's why there's a higher weight of supply hitting the market than there is demand. Candles, it's hard to do on XYZ because ultimately this is a US stock. It trades in New York and then it catches up the next day. So we don't really get clean candles, and you can see there's gaps all over the screen. That doesn't mean we can't trade it if it's looking good. It's just not looking that way today. So a little bit of an overview, I guess, of how the model works. We'll keep moving. I guess, hey, that's what we've done. Analyze, haven't we? These are my three A's of good trading. The first one is analyze. We've certainly done that. The next one is accept. Okay, that's my analysis. Accept it. Now, I might think that Block is the best company in the world, but if the analysis, which is ultimately telling me what the market thinks of Block, doesn't agree with me, I need to accept that. I have to accept the market's decision. And the next bit is act, which is manage your risk. So we have three options when it comes to managing our risk. And that could be either to maintain the risk we have. That's one option. So I call that equals R. That is, I've got risk in, I'm just going to sit on what I've got. The other option is potentially to add risk. So the setup that we've got here, based upon my methodology, suggests that more often than not, and that's all we could ever ascertain, is that more often than not, seeing what we see, the price tends to go up. There's no guarantees. It could collapse tomorrow, we wouldn't know. But we base our decisions on probabilities, not hunches, not guessworks about what the earnings are going to be. We can never know those things. The fund managers know those things very well, and they are voting with their cash and their shares. So plus R if we think more often than not this is going up, and then minus R if we think more often than not, based upon what the market is doing, we think this is going down. We've got three options here. Can we go thumbs up for plus R if it's a plus R? And I might not get anything. And I'll only give that 3 seconds because I know we're not going to get many plus R's. What about equals R? Are there any thumbs up for equals R? Now we've got the price face for no's because we don't have a thumbs down. So no equals R. What about minus R's? Thumbs up for minus R's. I know that's a bit counterintuitive, but we don't have a thumbs down. Okay, so what you can't see if you're watching the recording are the literally hundreds of thumbs ups that are coming here. So what I love about what our ChartWatch webinars have transitioned to now is me kind of doing the analysis and telling you what I think, to basically you being able to do the analysis yourself and being able to make a confident decision. Now, most people have gone with the minus R option there. I tend to agree with that. In fact, I was going to say, oh, could I get to an equals R? I can't even get to an equals R on this one. Oh, sorry, hurry. You may love XYZ, and none of us who voted minus R know what's going to happen next. And that's the thing. We can't tell the future. We can only make the best decision based upon the information we have, and I think we've done that. But tomorrow, Block could get taken over by, I don't know, Amazon, Microsoft, whoever's bigger than Block, at $130, $100, $200 a share. We don't know. Anything is possible in the markets. But when we're dealing not in, oh, that might be possible, but in, look, what's going to happen more often than not, I think the consensus that we've come to today is correct. Okay, Bill from NZ. Hello to all of our NZ watchers. And Bill said, can you tell me what is your favourite momentum short at the moment, please? Now, short selling is simply selling first and buying back later. There are a few tools you could do it. You could set up a stock lending facility with your broker. You could trade options, or you could trade contracts for difference. I don't want to get into the technicalities of these things, but it can get a little bit controversial. I'll be honest, I like to do it with CFDs, but they're not for everybody. Let me just leave it at that point. But the bottom line is we're selling first at a high price, and we can stick with Block on screen on some of the practicalities. Now, I think if you have a CFD account, it is simpler to explain, because it really does become what we've got here. So we've generally got two buttons on our platform, and we've got one button that says buy, and we've got one button that says sell, and that's for everybody, whether you're going long or short. And then typically we've got a box underneath which will have a quantity of shares, and in this case, for example, let's say we're going to trade in 1,000 shares of Block Inc. or whatever it might be. So when we're looking to short sell, we will type that into our platform, and we'll literally just go and then click the sell button. We'll click the sell button, and our broker will have a bit of a ledger going somewhere in the background that says, okay, well, this is Carl's account for XYZ, right? And they'll have a ledger for all of your shares, and they'll go, well, he doesn't have, what's his current balance of XYZ? He doesn't have any shares. Okay, well, because he doesn't have any shares and he's hit the sell button first, not the buy button, he's hit the sell button first, then he must be looking to short XYZ. So I'm going to create a balance in his account of minus 1,000 shares. Now, you've got to think, well, if that's minus 1,000 shares, at some stage, we're going to need to go plus 1,000 shares to balance out this equation, right? Why don't we put it here and here, so that, bear with me, ladies and gentlemen, so that at some stage we end up back here, isn't it? Zero. Okay. Now, how do we get those 1,000 shares back? Well, we literally go back at some stage, maybe after XYZ has come down to $65 a share. Let's say we sell it at $100 a share, and we buy it back at $65 a share. Well, we're going to make $35 a share on our 1,000 shares, which is $35,000 profit, if I'm not mistaken. Sounds like a lot of money. But that's exactly what will happen. We'll type 1,000 in and hit the buy button next to close this trade. If you start with hitting the sell button, you've got to hit the buy button to get those $1,000 back. And the difference, I mean, this is a shares ledger. There'll be another ledger for profit or loss. Okay, and we'll get credited the profit on that one. Now, the difference is if it goes up, at some stage we're going to have to buy those shares back. So if we sold them at $100 a share, and we finally buy them back at, say, $135 a share, well, that's a $35,000 loss. And this is what we need to manage. But we will, if you're following my methodology, we won't let it go that far. Of course, we'll have places that we will peg and manage our risk before it gets that way. If you think in these terms, you've just doubled your opportunity on the markets. We're no longer talking about markets only going up. We can actually start to target stocks that are going down. Now, that's the how-to of it. Bill's question is, what is my favourite momentum short at the moment? And the good news is I actually publish these every day for you. If we head over to ChartWatch ASX scans, then we can see that each day I create a list for you of my favourite uptrends. Okay, and then actually narrow it down to a shorter list. And if we scroll down, we'll get to eventually to my favourite downtrends. Okay, and then a short list of those as well. So I don't think I can answer your question more comprehensively than that, Bill. There's had a bunch of requests during the week saying, hey Carl, based upon your webinar last week, I noticed that my chart on TradingView looked a bit different from your chart in Amy Broker, which is the other technical analysis package I use. And I'm going to bet, ladies and gentlemen, it looked a bit like this. Hold on. It looked a bit like this. Okay, is that right? The price was, I talked about it being a turnaround setup, how the price was above the moving average, and the moving average had stopped behaving as an area of dynamic supply and started acting as an area of dynamic demand. And people go, hey, wait a second, my chart isn't doing that. Well, let's go back to how to fix that problem. So Helios paid a special dividend back here. It was about 44 cents. And really that special dividend needs to be accounted for in the price, and everything needs to effectively be shifted up by that amount. So if your chart setting doesn't do that, it's going to look very different, and that's wrong. What we're seeing on screen presently is it's just plain incorrect. All your technical analysis is going to be worthless unless you click that button which adjusts for dividends. Okay, so I think that's a really important public service announcement. Okay, they're all the offline requests. Let's head online and get to some of your new ones. We will do that silver review before the end, I promise. Let's go to James, who's got AQD, which is not ringing a bell, to be honest. It's not one that's come up in my scans recently, and I'm guessing it might have something to do, because it actually looks pretty good over on the right there. Might have something to do with my turnover filter, which actually I don't have the setting over here. So maybe we'll just go over here where I do, AQD, and we can see now there's a turnover filter. Basically, the turnover filter says, well, there should be a minimum amount of turnover activity in the company. Turnover is just its share price times the number of shares it's trading on the day, which is its volume. And ideally, I see at least a couple of 100,000 Australian dollars turnover on average per day over the last month, and that's a pretty low hurdle. If it's not meeting that hurdle, then it's not going to be meeting my turnover filter, and it won't come up in my scans. My algorithm will simply exclude it. So that's why I haven't seen it. It doesn't mean it's a bad stock. It just means it's very thinly traded. And stocks that are more thinly traded can be very volatile, because it only takes a relatively small order to move the price a long way, and that could cause problems with my technical analysis. Putting that aside, okay, this one is starting to show some signs of excess demand. We can see very quickly visually our trend ribbons are starting to turn up. We've got a short-term uptrend, long-term uptrend as well. Importantly, the long-term trend ribbon has done its job for the most part of behaving as a zone of dynamic demand. That's just fancy words for the price tends to bounce off the long-term trend ribbon. We've got decent price action coming in more recently. So if I draw in the peaks and troughs through here, yes, we've got rising peaks. Yes, we've got rising troughs. We don't have, I guess, good separation from the last trough to the second from last peak, because it's early in this new uptrend phase. But certainly we can say we've got a nice extension here compared to the last pullback. So I'm happy to say good price action. And the candles, the final flourish, are predominantly demand side in nature. I know that one's not ideal because it's got that upward pointing shadow. So does that one. But I'm going to just give it the more often than not. The demand side is showing control here. So it's checking out pretty well. The only thing then we need to look at, well, that's our, I guess, setup. That is our technicals, and something that's slightly different but sits over the top of this is reward to risk. So if I was to get in around the current price at about 6 cents, and I look up to see where the old points of supply are, and you'll tend to find that previous points of supply tend to act as future points of supply. So they create a bit of a barrier where the price might get a bit stuck. And I'm just going to catch sort of the tops of the shadows and some of the peaks and just grab a few. Okay, because the points of supply very rarely is it a point. It's more likely to be a zone of supply. And that's roughly what I think we need to think about here. And we're not all that far away from it. And that it's not a deal breaker. It just means that we ideally will see, or should see, I guess, in advance, some interaction with that zone, some indication from the market. I'm zooming out just to see where the next one is. And it's miles away, and it's ancient history, so I'm not worried about it at all. And the only reason why I've gone to the weekly chart here is to do that zoom, and I'll quickly head back. It's not to do any analysis. It's just simply, I call it looking out the corner of my eye to see if there are any major points of supply in the recent past. And if it's on the weekly chart and I can see it, it's recent enough. If it's not, then I just keep going. Okay, so there's nothing really major above that. And I think maybe even today we're starting to see a little bit of the manifestation of the latent supply that possibly sits in that zone. But this one's fine. Otherwise, I'm pretty happy with it. All we need to see is the demand side interact with that supply. Okay, that supply that's sitting up there, it just needs to be consumed. It's shares wanting to get 6.5 cents. Once that, we call them the deadwood, they're all the people who got in back here thinking that this is going to be the best trade ever, and around here they're thinking maybe it's not. And they're thinking, look, if it goes back, if I can get break even, I'm happy. Not everybody's going to think about it like that, but some people will, and there's going to be some element of supply there. The demand side, they've got cash. They just need to get their cash to those with shares, get them out of the market, and once they're out of the market, there's less supply, potentially. We'll see. If there's sufficient demand, we're going to explore those high levels. So white candles in here, higher volume, we talked about that on the Nasdaq, is going to tell us that we're actually consuming that supply. If I had to give this a score out of 10, look, it's pretty warm. I'd go 7 out of 10. What do you think? You don't have to give you an emoji, but I want you to now start. You've done this long enough for the people that have been here since the start to start to think in these terms. We're putting the pieces of the puzzle together to start to score every setup that we look at out of 10. And I think it's pretty warm. Decent trends, decent price action, decent candles. It's losing marks because we are at that supply zone and we probably haven't dealt with it yet. But if we do, it's going to go higher up on that list. Now, the question I have for you is, well, is this the stock we're going to buy today? Well, we haven't seen all the rest of them yet. That's important because we can't really determine this until we've seen everything. We've seen our universe of opportunity. And for me, the universe is every ASX stock because I have an algorithm that runs my model over them to narrow it down. Okay, but for example, if you're looking in one of my ChartWatch lists and trying to narrow that down, this is the process we're going to go to. It makes sense that when we get to that process, we're taking the 10 out of 10s, aren't we? So it's not that I don't hate your stock, James. In fact, I think it's pretty warm. Okay, it's just probably not the one that's going to get my risk to date, because ultimately every setup we're looking at is competing for our plus R, isn't it? Okay, let's go to Terry, who's got LSF. It's Terry saying, really enjoying your webinar. I'm very pleased to hear that, Terry, because ultimately what we're trying to do in this entire endeavour, the time I spend with you on Wednesdays, is to get you to the point where you can do the analysis yourself and make a decision, because there's so much indecision in markets at every level. And I think this is a very special thing to have, to go, yep, you know what? 6 out of 10. Not interested today. Now, it might get better tomorrow, and I'll look at it tomorrow, but right today, I'm moving on. I think this looks pretty good. What do you think, Terry? Short-term uptrend, it's very clear. Straight away, we can see from the trend ribbons, there's more work to do. Okay, if we get trend ribbons that look lousy, we can skip over it very quickly. But here, there's a little bit more work to do. So we can zoom in. We don't need to zoom in and do the work if we're not seeing those trend ribbons aligning the way we want. A little bit of a wild one. That's where I think we are. We don't know where that next peak's going to be. But look, and I might have actually missed one in there just in my rush. But certainly this is certainly higher than that. Look, I'm going to go higher peaks and higher troughs here. Pretty happy with that. But they're starting to overlap a little bit. They're not as clean as perhaps the ideal scenario I showed you early on, but still pretty decent. The candles, what about the candles? A little bit more mixed. We're seeing a bit of supply coming in here, that upward shadow, but they're small, aren't they? This is far more sinister and far more concerning, but probably coinciding with one of those really bad days on the market, perhaps. Look, it's come back pretty well. We can look down here to relative strength and get a better idea of whether this is more to do with the market or it's something, more stock oriented. Relative strength still pretty strong. That was probably more the stock than the market, because you can see the RSC dipped on that day, that one less so. But it's come back really well, I think. So everything's checking out here. This is the relative strength comparative. I know I'm hiding the R and the S, but that's what it means. And this is our volume here. I know I'm hiding a little bit of that, and that's our optimized true range, and you can use ATR as well. Let's go score out of 10. What do we think on this one? I think it's better than the last one, because when we zoom out, we don't see anything. Okay, and that's all that weekly is there. It's just a quick way to zoom out. I don't have to change my zoom. Go back to zoom normal. I don't have to change my zoom. I can just literally zoom out like that. I'm not going to go zoom in and do analysis here because I don't want to mix up, cross-contaminate my periodicities. But I can see something there. So it's better than a 7, is it? Maybe an 8 out of 10, maybe an 8.5 out of 10. Probably getting into that area for me. I think it's very, very decent. Let's keep going. Let's see what else we might find today. Terry, I'm just going to do one of yours because we've got lots and lots of people here with the requests, so we'll keep moving, trying to get some of those. Brent saying, just read your evening wrap from last night. Great piece on fund flows and Economics 101. Very helpful. Thank you, Brent. NXD from PAC. Let's go NXD, which is having some issues here, and this is one that has not turned out the way I would have liked, because I would have said on a day like this it's looking very, very strong. I mean, on that day there, I would have been happy to say, oh, just about 10 out of 10 because it's really rocking and rolling. But that's the model, isn't it? We don't know what's going to happen next, and it really doesn't matter what we think about the market. The market is going to reserve the right to do whatever it wants to do. And it even looked good on that day. You know, shallow pullbacks, like strong rally, 22 cents, 40 cents, doubled in value. And normally when you see that, people are going, nah, I'm getting out, double my money, I'm out. And that really didn't happen. Normally when you see that, people go, I can't buy it here, it's gone up too much. And that didn't happen. You know, on these days here, we're still seeing demand strong and solid in the face of a bit of supply, a little bit of supply, and then we get this. I don't know what happened that day. It could have been news. Possibly, quite possibly was, and it's changed the way the demand-supply environment thinks about the stock. It comes into this day and it holds the short-term uptrend ribbon, and then we're getting a little bit of nothing, or in fact, worse than that. So if we were to put on our Harry hindsight cap now and go back and say, well, what could we have done potentially to, if we were on this day when I thought it looked fantastic, maybe to get some risk out. I think this candle here is a pretty important one. It's big, it's black, it's closing on the low. I mean, it's completely undoing the work of the positivity here. So we think about where the demand started on this day here. All right, started at the low of the session, very shallow pullback on that low, that little downward pointing shadow, then up she went. Very solid. And we're actually closed beneath where that demand started. So it would suggest that the demand that started this move is either out of the market or they've got the shares. Okay, so that is my first indication of a minus R. Okay, then I didn't really get much else because that's not minus R, that's hang in there. Even that's not great, we're slipping a little bit, but we're still holding the short-term trend ribbon. Hang in there, hang in there, hang in there. All right, and then we get this one, which now has closed beneath that shadow there. So we can see this is the hold, the test and hold of the short-term uptrend ribbon. Lots of demand came in at that low. You can see it coming in from that downward pointing shadow. Okay, because this was another big black candle at one stage. We think about how this candle looked at one stage. It was big and it was black. The demand started to come in to buy the dip, and it started to come in to buy the dip, and it bought a little bit more. And the supply started to back away, thinking, okay, this is not so bad. Maybe we don't need to panic out. Maybe the news isn't as bad. Maybe we should hold on. The demand came in, buying the dip, buying the dip, buying the dip. Until the end of the day, we ended up there. But on this day here, what's happened to the demand? Much like we said, well, what happened to the demand on this day, And that's concerning for me. So this day here, I think is the second minus R. It's also close beneath the short-term trend ribbon. And these are stackable minus Rs as well. So if you can find a couple of reasons to do it, then that would be a couple of minus Rs as well. How much is minus R? That's up to you. I've told you before, I like to work in thirds, but you can work in any amount that you like. It just means taking some of your prevailing risk off the table. And for me, at that point, yes, I think I've conceded defeat, and that is a very humbling thing to do in the markets, to concede defeat and say my original thesis is not what the market thinks. And that's where I'd be ZRP. And if I got in on that day, and I would have been happily getting in on that day, certainly would have lost money on this one. And that should explain for you, PAC, I guess, my views on it now. If I'm ZRP, I'm not in it. What would it take to get back into it? Take quite a bit. I need to see the demand side coming back in. I need to see a move back to high peaks, high troughs. I need to see the right candles. I need to see that short-term trend ribbon behaving as a zone of dynamic demand. It might not take that long to occur. both in terms of price and time. I mean, that could be 2 or 3 weeks, 2 weeks, and it might only take, a few cents. So if I'm out here at, say, 28, 29 and a half or whatever it was, getting back in at 34, well, that's just the way it works. Okay, if that ends up being my next 10 out of 10 setup somewhere down the track. Now, because this is in my universe, it's one of the stocks that I scan every day, I don't need to worry about it. It'll come up. If it's doing the right things, it'll come up. I know it's a bit harder for you out there if you don't have the whiz-bang software and the algorithm that does it for you, but again, rest assured that in that ChartWatch ASX Scans article, which is out every morning, every weekday, if NXT deserves it, it'll be back in there. If I think it's a 10 out of 10 again, it's going to be back in those featured charts. All right, let's keep moving. Let's go to Andrew for A2M, which we've done quite a bit of work on in the past, haven't we? We can see that. We were clearly last dealing with a brick wall of latent excess supply up around this old major point of supply. And it still has not been dispensed with, has not been consumed at this stage, as you can see. It's not a lost cause either. We're still working through it. This level here is important. Certainly beneath there, it becomes a ZRP proposition for me. There's nothing so sinister in the price action since we looked at it last, which I'm guessing equals R is here. Was the last time we looked at it, to tell me that I shouldn't be that way today. This is so far away. I wouldn't want to give it all that distance. Today's candle is starting to look interesting, but it's still live, so I can't really comment on it. Look, I think I could go equals R, but maybe it's taking a bit longer than I would like to get through this latent supply. Demand's trying hard, but clearly that supply is pretty solid up there around that 960, 980 level. Now think about why this particular level is so entrenched in the market psychology. Why, I wonder, why all of a sudden is there a brick wall of supply in the market? $10. It's a pretty decent round number for me. And it could be, not everybody's got to think like this, but a lot of us, let's face it, think like this. Oh, if A2 Milk gets to $10, I'm going to take my profit. Or a big broker putting a target of $10, a valuation of $10, and it's up at that valuation now. So for them, they're getting out. But it's not like everybody's getting out. Clearly, there's still demand in the system because it's holding at 960, at 980. We're consuming that supply. And once it's consumed, well, if it's quite often we move into a supply vacuum. Everybody had to deal at $10 is dealt at $10. And here's the kicker. The people who are getting in now, they're not pegged at $10. Their research is suggesting, well, if they're getting at 10, what's their research suggesting? 15, 20. Their mindset's completely different. They don't have a $10 impediment. The people that are getting in now won't want to get out at 10 or 10.20 or 10.50. They're thinking much higher. So if we move into an environment of a supply vacuum where we've dispensed with that deadwood supply who thought $10 was the limit, we've got strong demand still because we can see that in the market. And the potential supply, the latent supply is thinking 15 and 20, we can move pretty quickly. And this is the whole psychology behind a breakout, ladies and gentlemen. You get textbook analysis 101, they're going to talk to you about breakouts. And that is the psychology behind a breakout. Okay, what do I need to do with it now? I'm happy to go equals R. I won't do a score out of 10, but it's not going to be high on the basis of what we're seeing, but I still think it deserves some risk because we are still working through that point of supply. Okay, let's go to John's got, hi Carl, your view on ASL. Okay, this is where we can start. ASL, great place to start our silver review. Before we do, let's head over to the silver chart. We're heading over out at TradingView. While I'm here, if you go to indicators, for the people that can't find my ribbons, and we get these emails, you said I got access, but I can't find them. Okay, go to indicators, go to invite only, and you can see I've got a few extra ones in there, but you'll see my support and resistance clouds. It's just another way I call my trend ribbons, and you click that little there, add to favorites, and then all of a sudden it appears in there, and then next time you go into indicators, it'll be in your favorites, and you just add it to your chart that way. Okay, very simple. Now we're going to, not zinc, I'm all over the place here, going to silver, because I do have all my bells and whistles here, because I did want to point out that if we zoom out, the next big level comes from all the way back in 1980. How about that? The all-time high for silver is 67.31. And you can see we're just spending a few candles here. And it's funny because the most recent level is this 2011 level, 59.02. And you think, oh, who could possibly still be thinking about that level? Well, if you look at where the price stopped 2 candles ago, it stopped right on it. And then right here, that one there couldn't get above it. And now it's just, so there's a little bit of a pause there. And as I keep saying, not everybody's going to think in this way, but some people probably will. And that supply will manifest itself in the market, in our candles, in our price action. But look, very strong here. Dare I say 10 out of 10. I know famous last words. Probably people will say, Carl, shut up. Just shut up about 10 out of 10s on silver, mate. I need it to go up. Short-term uptrend, long-term uptrend, price action, motive phase very strong. Candles are exemplary. Okay. But again, if you follow my ChartWatch Markets articles, you know this already. You've been following this for a couple of weeks. Now let's head back and do our Aussie silver review. And I will make one final comment on silver. Look, I don't know where it's going next. It could collapse tomorrow. I wouldn't have a clue, or it could go to the 1980 high. I don't know. I never know. I can't know. I'm just making a decision based upon the evidence I see. But more often than not, I would expect the chart we saw to continue to rise. On that basis, I can potentially add risk to that theme or to silver directly itself. I could be trading futures or I could be trading contracts for difference. Okay, let's go zoom normal. We'll start off with ASL, and I'll do actually, I think I even have a list here. Let's go to silver, and I hope they're all on the list. I haven't updated this list for a while, so we'll see how we go. Andean Silver, short-term uptrend, long-term uptrend, quick and easy. So there's definitely something here. Price action, very strong last motive phase, certainly rising peaks and rising troughs, so I'm pretty happy with that also. But there's a little bit of an elephant in the room in the form of this previous point of supply, and it is a serious point of supply, I think, to contend with, on the basis that the price fell very quickly, very sharply from there. Okay, and a decent fall as well, 220 down to 150, and these silver stocks are extremely volatile, ladies and gentlemen. So go into this eyes wide open that if the silver price has a sniffle, you've got a full-blown cold over here in your stock price. Typically what happens, people who trade silver stocks, you know that's true. So we are in the shadow of this latent supply here, this major point of supply. And you can see already the manifestation of that supply in the market. Ladies and gentlemen, I can't make this stuff up. There's your upward pointing shadow. There's your black body. At one stage, this was a white candle moving into the zone. And guess what? They found in the zone, they found excess supply and it got beaten back. Today's candle is much the same. Is that a disaster? No, it's not a disaster. We must trade with the supply. All the people that got in here thinking that this was going to the absolute moon and beyond, who then thought, oh my gosh, what have I done? I've gone in at the top, and they're just waiting to break even. Ironically, they will hold ASL all the way down to zero, but they'll get out as soon as they're at break even, and some of them are. Not all of them are, some of them are. The only way to deal with them is for the demand side to trade with them, ladies and gentlemen, and we can see great signs here that they are through the volume. Volume is buying and selling. People say you want your stock price to be going up on high volume. That is rubbish. Okay, I prefer my stock price to be going up on as little volume as possible. I won't tell you why, that's homework. You need to think about it. If a stock price is in a motive phase and it is going up, I want as little volume as possible, because when the volume appears, it's generally a bad sign. And that is the opposite, ladies and gentlemen, of what is written in the textbooks, because let's face it, if it's on the bookshelf, it might not be, secrets of technical analysis might not actually be secrets. Okay, so there are times where we do want to see price rising on strong volume, and this is one of them. Okay, it's a few finite scenarios. You want to see price rising, not so much rising, but hitting a big level of supply on high volume, because that is telling you we are clearing out that supply there. We need to trade with them. They've got shares, the demand side's got cash, you've got to trade. Volume is buying and selling. So we are seeing signs of potentially clearing through that latent supply. Now, the candles tell us who's winning the battle, and right now it looks like supply is pretty solid up there. What we need to see is that big volume, that big clear out, but with a big white candle closing, I'm going to say 220 or better. Okay, and for if I see that, then unequivocally for me, that becomes a plus R proposition. if I see that. And let's call it next demand side candle. I know I've got a few acronyms going, people writing, well, Carl used more acronyms last week in the webinar, I don't know what they are. Next demand side candle. We know what a demand side candle is. It's white, it could have a downward pointing shadow, but it's closing very, very close to that high, okay? And let's go plus 220. And the reason why I like to write on the screen, as we saw with A2 Milk, when we come back next week and the week after, we're going to see some of these things and if they played out. Oh, Carl, does that mean I need to sell my ASL because everybody else is selling? Well, not everybody else is selling. I mean, there's still plenty of demand in the system. Volume's telling you that. No, I don't think so. I'm very much equals R here at this point in time because I want to see how this plays out. So I'm going equals R on ASL. Let's keep moving. Let's go Aeris Resources. I know this one's a bit more of a copper play, and maybe that's why it hasn't done as well, potentially, as ASL, which is a bit more of a pure silver play. Warm, isn't it? I won't put any markings on this screen, so I think it'll waste our time. But is it a 5 out of 10? Is it 6 out of 10? It's probably in that order of magnitude. Does it need us to do any more analysis today? And that's the point, no. And if the answer is no, keep moving. Oh, but Carl, let me tell you about Aeris Resources. My gosh, their operations are top notch, mate. Generally when that happens, I'm off playing Tetris on my phone or doing Duolingo, because I'm learning French at the moment. Aurelia, do I need to spend any more time on this? Thumbs up, spend more time on it, or surprised face, don't need to. Is it 8 out of 10, 9 out of 10, 10 out of 10? What do we think? No, we've got... This is so funny. You can't... Maybe you can see it, I don't know, with the surprised faces for our thumbs down. Argent Minerals. A little bit better, isn't it? Like it's up there with the ASL, not as clean on the candles, probably even all the price action, but that point of supply is clearly in the market's mind as well. Something I think we can continue to monitor, but not right now. We're going to flick past ASL, obviously, and I'll show it to you again because we're now hopefully we've got a trained eye to what we need to spend more time on and what we don't. And I don't mind spending more time on ASL because it's pretty close. BML, a couple of big down days. It always concerns me when silver's going gangbusters, but a silver stock has big down days like that. Now, again, it could have been news. I can't say off the top of my head, but that's disappointing there. So otherwise, it looks very, very warm. Can you see another example here? I mean, I keep using this phrase. I can't make this stuff up, but look at that. I mean, there you go. Past points of supply tend to act as future points of supply. Now, this is more of a gold company. I'm guessing silver's a byproduct, but I mean, that looks very strong. It's been in my watch list many, many times. I'm going to say 8.5, 9 out of 10. That's very good. Might have a little bit of a problem at 5, bit of a round number, but otherwise, I think that's very strong. I know it's not exactly a silver stock. Mithril, I think we can keep moving very, very quickly here. Actually, I don't mind this one. Can you tell why I like this one? A few people doing the no, they're not sure about it. And that's okay. I get why you're not sure about it because this trend is still down, all right? But remember what I said about moving averages. They're delayed, they're slow. They take time to catch up. And price action is coincidental with what's happening in the demand-supply environment. It can't be any other way. Our peaks and troughs, but particularly our candles. Now, today's candle is still live. So we should discount it. But I'm going to say if it closes like that or better, that's a pretty strong demand side showing above average volume. And we're only halfway through the day. So that's going to grow and grow and grow. So it's telling me that we're starting to see demand moving back in. Remember, volume is like the volume on your stereo. Turn it up. Lots of people interested. Turn it down. Nobody can hear it. So that's a good sign. Demand's starting to be interested and they're starting to clear out because it's above average the supply that's sitting there. Okay, and probably there's going to be a little bit of supply that's sort of sitting in there in that region as well from that gap. It's starting to clear it out. So that's a good sign. But the candle needs to close there. It's absolutely critical. That candle is insufficient for me to say that we're actually interacting with that supply. This is the one I want to see. Okay, now if we've got that, we've actually got decent rising troughs in a zone where we would expect there to be latent demand, and that's my my long-term uptrend ribbon. Why does it work? I don't know, ladies and gentlemen. I wouldn't have a bloody clue why it's as good as it is, but it just does. So that's good enough for me. We're closing above the short-term uptrend ribbon. That's a minimum requirement as well. It's starting to look very interesting. Now, what about the big elephant in the room, the huge latent supply? Well, it's very different from ASL. Very different. I know ASL's way up there. Full credit to ASL. This one, relatively speaking, has not been as strong. You can see here on the RSC, not as good. Starting to pop back up though. That's important. Today's candle needs to close there. That's important. But when we look at this, I've talked to you about this two sort of layers of the methodology. One is, well, what does the setup say? The trends, the price action, the candles. And over the top of that is reward to risk. So we saw on ASL, the reward to risk isn't quite there yet. It will change because once we have dispensed with this supply, okay, if this is my upside, if I get in right now, it's very limited, because my downside is, well, quite a bit till I get to the recent points of demand that I can then use to manage my risk. But if I can dispense with this point of supply, guess what my upside becomes? Okay, think about that. Now, if I go back to here, this is my upside limit, right? This is my major point of supply. This is my reward limit for the time being. Now, we won't know till we get there if there's any supply there, right? But the bottom line is a long way away. So if I'm getting in, let's say we get a candle closing like today or better, and I'm getting in around here, right? And I think, well, I know I'm going to be managing my risk down here. See, because I don't use stop losses, okay? You can use stop losses. And I've told you my theory on this before. I get out when it's time to get out. I'm disciplined. I don't say, maybe I'll hold it for another day or it might bounce. I just say, no, I've got a signal. I'm getting the hell out of here, right? So I don't need a stop loss because I've got my signals. But this is where I start to manage my risk, right? So this is my potential downside, okay? And I might have signals before that as well, don't forget. And this is my upside on this trade. The question is, do I have at least 1-to-1? I need at least 1-to-1, because why would you take a trade where you stand to lose more than you stand to make? So this is a very interesting setup for me. It's a different type of setup, and I like to get a mix of setups in my portfolio. Ones that are coming down and turning up, ones that are breaking out. Continuations, turnarounds, sometimes aggressive. That was an interesting setup. South 32, is silver the main game? No, it's not, but it is certainly it's one of the largest silver producers in the world. That one looks pretty solid. I could certainly go 7, 7.5, maybe even 8 out of 10. That looks very, very solid there. More of a turnaround setup, but it is holding that long-term uptrend ribbon really well. Sandfire, again, mainly a copper producer, but silver is a byproduct of what they do. That one looks very, very good, but more with a copper angle. We get into Sun Silver over here, which is a bit in between from ASL and POL. If we talk about, well, things aren't looking too bad in the setup side of things, but what about the reward to risk side of things? Well, then we're still, we've got some problems there because we're closer. It's harder to make that reward to risk in that case. Wonder what we did with it last week. I presented you with 3 opportunities. I can't remember what we did. I'd have to go back and check the tapes. Or might have been the week before. This one looks very interesting. If we go zoom normal here. So this is SVL Silver Mines, a bit like ASL. But unlike ASL, we're not seeing the fingerprints of supply that we'd associate with this point of supply. I'm going to move that up because that's an old one and it's been replaced now by this one. So that looks very interesting. I'd put this above the ASL setup. Okay. In fact, I know we said equals are last time. Now, today's candle would have to close like it is, white and near the high or better for this to be the case. But if that's the case, I could go a cheeky little plus R here. I'm going to go on, high, close. All right. Demand side candle, high, close. USL, 2 more to go. Somewhere in between. Okay, I still think very good, and I probably should have put some equal R's on a few of these, but yeah, we can see here this is an equal R prospect, isn't it? And closing out our list with, and if you've got other ones, put them in the list. I'll get to them. WCE. I actually put this in the list, I think, on this day for exactly the same reasons as the POL. So it's showing how I've just taught you something, but I've also been applying it as well. Okay, so that was the way I put it in. So I'm going to go ditto on that. It's not showing any amazing signs in the last few candles that we need to be adding risk just at this stage. But certainly, again, I could get to an equals risk on this one. So look, we'll leave it there. You might have more in the list. I'm going to do 5 more because I can see we're getting quite late on time. Wesfarmers. I can do this one very quickly as one of our final 5. Short-term downtrend. The short-term trend ribbon appears to be limiting the upside price action, as is now the long-term trend ribbon. Yet on the way up, the short-term trend, well, that's not a great example, but certainly here it tended to support. More often than not it does, until it doesn't, and then we've got problems, right? Big black candles, massive black candles in the system. Lower peaks and lower troughs until recently. We've got a little bit of a pop-up here. I guess the broader market has popped up, isn't it? That was probably the day we saw the rally in the market. But it's barely followed through, and you can see that straight away in the relative strength comparative. It's not beating the market. And that's a bit of a concern for me. Today's a little bit of an upper shadow, but needs to close there or worse, I'd say. Would I have any risk on this? So ladies and gentlemen, let's start. Let's do the final five. We'll get your views on this. Is this a plus R proposition? Can you see your own emojis, or am I the only person that can see them? I don't know. We've got so many surprise faces, so that's a no. What about equals R? What about equals R? A few people going, yeah, look, okay, and we're not all going to agree, and this is what makes a market. We're not all going to agree. Some are going to go, you know what, I can get to equals R on that one. Let me just see how it goes. It might hold that low there, so it might hold on to that, might start to push back up, and then the long-term trend might start to do it. I'm going to get equals R. If I squinted, right, so I can maybe see, 1 millimeter through my eyelids, I can get to equals R, but it's probably not there. I think, can we do minus R, ladies and gentlemen? Humour me here. Let's go minus R. What do we think on this one? Now, Wesfarmers is a big blue chip stock. Now, it is absolute blasphemy, ladies and gentlemen, for all of you to do that many thumbs up and say that actually this incredible blue chip stock, the benchmark of many portfolios, actually deserves to have risk taken off the table. Now, how you deal with that is up to you. I'm only showing you how my methodology works. This is not telling you to buy or sell Wesfarmers. It couldn't be further from that. But it might spark something in your brain to go, you know what, sure, I own Wesfarmers, but maybe I don't need to own as much of it. Maybe I can redeploy some of that capital elsewhere on something that is going up. And if it's just something, that little spark that says, well, minus R doesn't mean I have to get out of everything. It just means I need to have less risk. Let's keep going. Let's go to, now if you hang around afterwards, I'll do a quick 15 or 20 minutes on some of these longer questions that look got lots of words with them. I'm just trying to try and catch the stocks. This is the fourth from the end. P&R, I think we've got some problems here on P&R, short-term downtrend, but we had problems a while ago. What I haven't done so much of today, I guess we've tackled new concepts today, haven't we? Hopefully you agree with that, is sort of the, well, where would we have got out scenario. And I'll just do it very quickly here. I won't invite too much discussion. But I think we can see we certainly had some problems on Pantoro. And this was one that was certainly in my list many, many times. So I can go here and I can check that. And if I go PNR and type that in, what we're seeing here is every instance that Pantoro's coming to my feature charts, not the general watch list. I'm working on gathering the data for that, but into the feature chart. So we'll just take recently, sort of, you can see here from, well, it's been in for a while, hasn't it? So really from middle of last year, but you can see each time it's featured, it's actually had a higher price pretty much. So from 163 up to 655, I think that's a pretty good call. 18 times featured. The last one was on the 9th of October. So if we go back here and just check that 9th of October, the last time it featured was probably, not that day there, that day there. So there you go. So I featured this as a plus R on that day, which is the absolute high. And I really wanted to make this point that my model said for me to add risk on the day that was the absolute top. There you go. Ladies and gentlemen, that's how my model works. It could not have got that any more wrong by definition. That day there, it said add risk. Okay? Now, here's a bit of a drawback with my model. It can't tell the future. It doesn't know what's going to happen next. But I would bet you any sum of money that if I have a chart that looks like that, more often than not, it's going to go up. Because don't forget, it was saying it was going to go up from 163 and now it's 660, right? So 17 times it nailed it. And eventually, eventually nothing goes up forever. So eventually one of those times, it's going to not work. But that's okay. The reason why people have such a hard time buying and selling stocks is, number one, they really have no definitive way of doing it. Number two, they think they need to be all in and all out. And that's the hard part. If you think you need to be all in and all out, it puts so much pressure on where to get in. I've got to nail this entry because I'm going to put all my money that I intend to trade on this stock in at once. And the same as I have to nail my exit. I have to get out all at once. There's no rule in the ASX handbook that says you have to do that. So for me, I get in that day happily adding some risk, but I've added plenty of risk before that. I know that I'm going to get a signal pretty soon that I might need to minus risk. And it happened the day after. I won't ask for a show of thumbs, but I think it's pretty obvious that day there, the risk I added yesterday is going to come out today. Still okay. We're still okay. Oh, it's fine. It's fine. Well, I've still got risk on the table, don't I? I've still got skin in the game. Nothing to worry about here. All good. Oops. Oops. All right, I've got a lower peak. I've got two serious supply side showings. This one's above average volume as well, so there's lots of demand getting hit by lots of supply. You know what? I don't have to think too much about it. I'm not going to overthink this. I'm just going to scratch the itch. And if I've got if I had 1,000 shares left, maybe I take 200 shares off. I deal in thirds, but it's just scratching that itch. Oh, geez. Glad I did that. Because if I had to find the exact exit, I never would have got out that day because it looked too good. If I had to sell all my shares at once, now I'm thinking, I nearly said a bad word there. I didn't get out the top. I can't get out now. Like, I should have got 660. Why didn't I get 660? I knew that was the top. I knew it was never going to go higher than that. What an idiot. I should have taken, I had so much profit. Do you know how much profit I had? I had $3,462.96 profit. Now I've got $2,482.12 profit. I'm missing out on that $1,000, but I'm not getting out here because I want that $1,000 back. Now stuff that. We're back in. Come on. Look, it's a good company. It'll come good. Let me just double check the company announcements, the fundamentals and the broker recs. No, I'm fine. This one, let's just slap this one in the bottom drawer now. And when it gets back up to 60, I'll get that profit I deserve. Okay, or close beneath the short-term trend ribbon. Close beneath the short-term trend ribbon, black candle. Ladies and gentlemen, you have a choice on how you do stuff, okay? ZRP a long time ago. I know that doesn't help whoever's got it now, but it should frame this where I am right now, which is copy and paste. I can't see any reason. Can you see any reason? I won't ask for thumbs up emojis. Can you see any reason to have any risk on this one right now? What score is it out of 10? We are dreadfully over time, but I did promise, I think I've got 3 more. MI6, which is super interesting. Let me just put that on there and let you ruminate on that one. Okay? I don't think we can ignore that. Prior to that, again, I would have been plus R. In fact, I was plus R. But I can't see what's going to happen next. Okay? I wish I could. Let me just reiterate. That day there, plus R. Next day, minus R. Oh well. Do I plus R? Do I equals R? Do I minus R? Okay? Do I care? I just do the work and get on to the next one. I know I'm rushing, but I did promise. I've got 2 more to go, I think. Let's go to LKE for Mike. Analyze, accept, act. Won't take long on this, and I won't ask for a show of hands. Plus R, equals R if you've got it, and your risk bucket's full. Where I have to put that option in. Is that fair to say? I can't just go plus R on everything. Oh, plus R, Carl said plus R. Look at my risk bucket. Oh, sorry, that's an equals R. And 1 more to go. PMT, last one for the day, and coincidentally another lithium stock. Looks fine, doesn't it? I don't think we've got any major issues here, do we? And I think now you know what to look for, what's going to turn this into a minus R or a plus R, but I think we can comfortably go equals R at this point in time. I so wish we could have done more, ladies and gentlemen, but we have to, we have to adjourn at some point. Now, if you want access to those trend ribbons, there's a link in the description of all of our YouTube videos, and it's certainly beneath this one if you're listening in the recording. So just scroll down a little bit, and there's a form you need to fill out. Put in your TradingView username and your name. if you put in the name field something like N or S or whatever it is to get through that field, I'm not going to give you access. It's as simple as that. I'm going to ignore it and delete your request. I want to know your name because I think that's a basic common courtesy. That's all I'll say about that. Of course, if you are watching on YouTube, make sure you subscribe to stay notified of all of my future updates. We want to do more of these, obviously. We can expand into all other areas of technical analysis. Hit the subscribe button, and of course the thumbs up button is so important to let me know that you actually do like what I'm doing, so I know I'm on the right track. Apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you today. Hopefully you got lots out of it. All the best for your trading and investing until we catch up again. Bye-bye for now.